Hello and welcome to traders and investors. I'm glad to present you the daily market review prepared by analysts and experts from fx.co portal. Here we go. Today is August 16 and we're starting from euro-dollar pair with Jakub Novak. But first, let's have a look on 5-minute chart for analyzing yesterday's transactions. The test of 1.0939 coinciding with the rise of the MACD line from zero prompted a signal to buy EURUSD. However, the pair did not show strong growth. Euro stayed afloat only because the reports from the ZEW about business sentiment and present situation in Germany, as well as business sentiment in the Eurozone, exceeded expectations. Today, important data on the Eurozone's second quarter GDP will come out, followed by a report on the volume of industrial production. They may negatively affect risk appetite, resulting in a drop of euro. For long positions, buy euro when the quote reaches 1.0925 and take profit at the price of 1.0981. Growth will continue if the GDP data revises in a favorable direction. However, when buying, make sure that the MACD line is above zero or is starting to rise from it. Euro can also be bought after two consecutive price tests of 1.0899. But the MACD line should be in an oversold area, as only by that will the market reverse to 1.0925 and 1.0981. For short positions, sell euro when the quote hits 1.0899. And take profit at the price of 1.0860. Pressure will increase in the event of inactivity around 1.0930. However, when selling, make sure that the MACD line is below zero or is starting to move down from it. Euro can also be sold after two consecutive price tests of 1.0925. But the MACD line should be in the overbought area this time, as only by that will the market reverse to 1.0899 and 1.0860. The next stage of our review is the next major. Petr Jakimovic describes how to trade GBPUSD pair. GBPUSD has been trading upside this morning, and we see potential for the higher prices towards upside reference due to the sideways regime and the rejection of the key support cluster at the price of 1.2625 in the background. Petr sees potential for the rally towards upside reference. Upside objective is set at the price of 1.2800. Stochastic oscillator is showing fresh bull cross, which is another good sign for the further upside movement. Key support is set at the price of 1.2620. What about cross-currency pairs? For example, AUDJPY pair, Arif Makmur describes. Even though on the daily timeframe chart of the AUD-JPY cross-currency pair appears that is still controlled by sellers, which is marked by the CCI indicator. which managed to break below the three main levels and then stuck at the -100 area level to level 0. But with the appearance of the descending wedge pattern, which the price is also coincidentally stuck at the level of the rejection area cyan box on the graphic. So, as long as the decline does not continue until it breaks below the 92.85, AUDJPY has the opportunity to rally again up to the level of 95.71 as the main target, and if volatility and momentum are sufficiently supportive, AUDJPY could have the opportunity to continue strengthening up to the level of 97.61. Gold, sweet gold. We've got a trading plan for this commodity asset presented by Petar Jakimowicz. Gold has been trading sideways at the price of 1904. And we found rejection of the support zone at the price of 1900, which is a sign for the potential upside rotation. Due to the sideways regime and the rejection of the support cluster at the price of 1900, Petar sees potential for the rally towards upside references. Upside objectives are set at the price of 1911 and 1915. Stochastic oscillator is showing fresh bull cross, which is another good sign for the further upside movement. Key support is set at the price of 1900. And now it's time for USDJPY currency pair. Dimitris Tapas describes. Early in the European session, the Japanese yen is trading around 145.50, within an uptrend channel formed since August 7, above the 5-8 Muri level, and above the 21 SMA. On the 4-hour chart, we can see that the USD-JPY pair is trading with a strong upward movement. It's expected that in the next few days it will continue ascending to reach 6-8 Muri level at 146.87. USD-JPY reached a new high at 145.85, its highest level since November 2022. The weakness of the Japanese yen is due to bearish market sentiment. The US dollar continues to strengthening, which exerts negative pressure on the yen, and this trend is expected to continue in the coming days. USD-JPY continues to underperform as a result of a dovish stance taken by the Bank of Japan, which is the only central bank in the world to maintain a negative benchmark interest rate. This is a factor that exerts weakness in the Japanese yen, so any short-term pullback will only be seen as a buying opportunity. In case the Japanese yen breaks sharply below the 21 SMA, and below the psychological level of 145.00 in the next few hours, we could expect a bearish acceleration and USDJPY could reach 48 Muri at 143.75. It could even reach the 200 EMA, located at 142.27. On the other hand, as long as the Japanese yen trades above 58 Muri level and above the 21 SMA, any bounce around this level could be seen as an opportunity to buy with the target at 146.87. Our trading plan for the next few hours is to wait for the JPY to fall below 145.00 to sell with a target at 142.27. The Eagle indicator is in an overbought zone. A break below 145.00 could enable the signal to sell. And again, it's Arif Makmur with Crude Oil Commodity Asset Trading Plan. From the daily timeframe chart of crude oil commodity assets, it can be seen that there's a deviation between the price movements and the MACD indicator. Besides that, currently the price movement is below WMA20, confirming that within a few days, if there is no upward correction rally which exceeds the level of 84.88, then CL has the potential to weaken down to the 78.69 level. This is the first target, and the 73.84 level as the next target. That's all for today. See you online soon. Good luck.